Acapulco, Mexico. This is Anarchast.
Hey everybody, welcome to another edition of Anarchast, your home for anarchy on the internet. I'm here in always sunny Anarchapulco. It's not always sunny, but it's literally 350 some odd days of the year. As you can tell, it's always sunny. And I've got a great guest coming in from Hong Kong, one of my favorite places in the world because it's so anarcho-capitalist. It's Simon Dixon of Bank to the Future. And he wrote a book actually in 2006, I believe, called Bank to the Future, Protect Your Future Before Governments Go Bust. And he was talking about just changing the banking industry as a whole. And then afterwards, actually, Bitcoin came out and he changed his book. He changed his whole model. He actually started something called Bank to the Future, which I've actually used numerous times to fund and invest in numerous cryptocurrency, blockchain, and Bitcoin-related companies. And so it's a pleasure to have him on, especially I always like that when I meet someone who I've been using their product for a while. As an anarcho-capitalist, it's always sort of like a cool thing. It's like, oh, you're an entrepreneur too, and I've used your products before. That's great. So it's great to have you on, Simon. But before we get started, I got to ask you a question. How did you become an anarcho-capitalist?
Well, I was working in the dark side in investment banking, and I was a market maker for a couple of years, manipulating markets and getting paid very well to do so. And then I was working in floating companies on the London Stock Exchange for an investment bank in the IPO market. And after a few years of doing that, I wanted to return to some of the things that I learned by academia. I was studying economics, and I wasn't satisfied with some of the things that I was actually learning. And in 2006, I just decided that it was time to leave banking, and I started working on really returning to some of those economic models of how banking's modeled in economics. Wrote some very geeky academic kind of style blogs and papers on how to eliminate systemic risk in banking. But when Bitcoin came along, it all got a little bit more exciting. So that's when I really started seeing the disruptive force that was coming through.
Yeah, so I guess through discovering Bitcoin, you ended up meeting a lot of sort of anarchists and anarcho-capitalists. Had you been exposed to that sort of people before?
No, well, I mean, before that, I was at university and indoctrinated into wanting to work for an investment bank. And after a couple of years of doing that, and realizing I was just really bored of just trying to scalp my piece out of the market as a trader, and just wanted to hang around with some more interesting people. And so I went to the other extreme when I started meeting some of the people behind Bitcoin.
Yeah, and I know you've gotten very involved with that. We'll talk about that a bit more. And let's talk about Bitcoin a little bit, because you wrote your book in 2006, so that was before Bitcoin had even been invented yet. Bitcoin, of course, came out in 2009. And I think you updated your book afterwards, and you pretty much changed everything you were doing after that. Is that correct?
Yeah, so prior to that, I was really focused on kind of lobbying government in order to introduce changes in banking, and what an extremely frustrating task that was. And then this whole this word called Fintech kind of evolved, and I started to recognize that there was actually the opportunity for bottom-up reforms rather than top-down reforms, and these bottom-up reforms seemed like they were a lot more exciting, a lot more exciting to be involved with, and we're actually moving a lot faster. So that's when I decided to write the second version of Bank to the Future, the book, and that included a lot of the fintech innovation that was coming along, whether that be from peer-to-peer lending to cryptocurrencies, and everything in between, and created a bit of a fiction book to it where we traveled back and forth in time, and solving some of the problems with banking in the past and looking at the impacts in the future. And then we had to keep returning to the present to see if we could solve those problems.
Yeah, one question I always like to ask people who got into Bitcoin quite early is, where were you and what happened when you first found out about Bitcoin? It's sort of like when LBJ had JFK killed. A lot of people who were alive then remember that. And of course, a lot of people remember the false flag attack of 9/11, where they were when that happened. Where were you, and what was it like when you first discovered Bitcoin?
Well, I was contacted on Facebook Messenger by a guy called Jonathan James Harrison, Johnny Bitcoin, and he had actually gone homeless and moved into a squat with one of the Bitcoin developers, Anarchapulco, and had invested everything he owns into Bitcoin. And so I was somewhat intrigued that somebody would actually do that, and he helped me get set up. And once I received my first bleep and realized that this actually is a lot of the interesting things that I was talking about. I talked about in the book about 3 problems in banking, and none of those problems existed in the Bitcoin ecosystem. So that got me invited to the first Bitcoin conference in the world, which was in Prague at the end of 2011. The Bitcoin price was around about $3 then. It was sponsored by Mt. Gox. Max Kaiser and myself were there, and there was a startup pitching. Tony Glippi was pitching his concept for BitPay, and really after that conference, I went down the rabbit hole and really started redesigning, I guess, my investment strategies around Bitcoin and Fintech.
Yeah, that's great. And of course, we're talking right now with Bitcoin at all-time highs as we speak. So obviously, you've done well going with Bitcoin since 2011, as have I. We actually mentioned Bitcoin here, and in 2011, I believe, maybe it was 2012. I can't quite recall. With Trace Mayer, and it was around $3. And so we've been covering Bitcoin since then. Of course, as anarchists, anarcho-capitalists, Bitcoin is just massive for us. It's a way to separate the most important thing in our daily lives, aside from love, of course, and then family and things like that. But the most important day-to-day transaction we do is it always includes money. And if we can separate that from government, of course, anarcho-capitalists love it. So I've been into it from pretty much when I found out about it in 2011. And you mentioned in your book, you pointed out 3 problems with sort of modern-day banking. Maybe mention those problems and mention why Bitcoin has solved them.
Sure, yeah. So the first problem in understanding the systemic risk in banking and how risky your bank deposits actually are, which many people don't actually treat bank deposits as an asset class. But if you're holding your money at a bank, that is actually an asset class that is subject to certain risks. And one of those first risks is that you don't actually own it. So if you receive your wages in a bank account and you hold it in a bank account, that's not actually your money. The bank is the legal owner of that money. Now, their business model promises to repay you that money, but they're not actually legally obliged to do so. So the first problem was that it separated ownership of money from the individual that has that positive balance in their bank account. Now, with Bitcoin, what first intrigued me is that I discovered after researching a bit further that it was a bearer asset and it had many other properties of cash and gold. If you own a bar of gold and you store it under your bed, then that's your gold. Somebody has to steal it in order for it to actually be taken from you, which is exactly the same as Bitcoin. Bitcoin is your money and there's no counterparty in the middle and it's legally yours. And that was the first property. The second property with banking is that when banks become the legal owner of your money, they actually spend it as they wish. And how they spend it is in line with their business model. And their business model is to try and make as much profits with as little risk as possible. So the asset class that fulfills that criteria is that they use your money in order to lend for people that want to buy property. And the property markets account for approximately 40% of all the balance sheet of a bank, and your money is essentially used in order to allow people to buy property. And that's the main reason why property prices continue to go up, is because it's leveraging everyone's bank balances and deposits in order to stimulate that market. The other 40% goes to extremely risky financial speculation, and only a tiny percentage of it goes to what banks were originally set up for, which is actually allocating money to create jobs and small businesses and maybe some consumer loans. But with Bitcoin, it actually takes the money that you own and has a peer-to-peer payment system attached to it. So if you send your money, then you are going from you as a counterparty to someone else as a counterparty with no counterparty in the middle. You as an individual, rather, with no counterparty in the middle. So it's a peer-to-peer system. The third is actually understanding the monetary policy, and I'm sure your viewers are very familiar with some of the problems in our monetary policy, but the way that I summed it up is that the central banks don't actually print that much money. Many people criticize central banks for continually printing money, but it's not actually really the central bank, because they control the amount of coins and cash in circulation, and they don't tend to increase that at very high rates. What they do is they try and control how much money banks create by manipulating interest rates up and down to send people bankrupt if the economy is going too heavy, or to try and get them in deeper debt if the economy's not doing too well. And through that mechanism, banks actually invented digital currency. So the money at a bank is actually a digital representation of the currency that governments create. And the problem with the way that banks actually are able to create it is they're not allowed to print it like a central bank. They have to lend it into existence, which means that all money, if someone's got a positive balance in their bank account, it means it has to be matched with somebody else's negative balance. And that means that in order to stimulate an economy, you need to continually find new markets for this debt, whether that be a central bank taking on some toxic assets, or whether that be an individual consumer that can't afford to buy property, getting some subprime loans, or whether that be a company or a small to medium-sized enterprise borrowing that in order to grow. You need to find new markets for the debt, or even if it's the governments, just whack it on the government to increase their ever-increasing debt level. And the net effect of that is you create asset bubbles in property because of this, and you have different redistribution markets, and all the money supply is essentially backed by debt, and that creates kind of an inflationary effect, whereby if your wages are not increasing at the same rate that these assets are increasing, you end up with your purchasing power decreasing over time. And this kind of redistribution effect that we've seen, where 1% of savvy investors are on the right side of this curve, and most of the population are on the wrong side of this curve. And that's kind of the system that we're at right now. Whereas the monetary policy with Bitcoin, without getting into the too geeky stuff, but it was built upon sound principles, whereby the money supply is fixed, and therefore over time as an asset class, if this use case of Bitcoin continues, then it was designed to be de-inflationary, which means that your purchasing power increases over time and it encourages savings. So you kind of have these two different monetary policies. You have traditional money, whereby if you're holding your money in this asset class called a bank, then you don't own it, they spend it for you, and your purchasing power goes down over time. If you hold your money in Bitcoin, and again, there's risk attached to this, because this is a risky asset class, it's a new asset class, but you own it, you get to spend it as you wish, and if Bitcoin continues the way that it's been going up until now, for the 6 of the last 7 years, it's been the highest performing currency, outperforming most other asset classes, then your purchasing power goes up over the time, and you get a savings economy, which is not necessarily encouraging needing debt in order to grow.
Yeah, absolutely. I'm curious your take on the latest sort of Bitcoin issue that's been happening over the last few months, which is the scaling issue. Just curious to hear your perspective on that.
Yeah, so the scaling has been going on for many years, and it was a topic that I just chose to outsource to the more technically minded people that have got us in Bitcoin this far. But it started to reach a point where it can't be ignored anymore. So my initial reaction was to try and understand all the different parties involved in this equation. So because I live in Hong Kong, it's very easy for me to pop across to China and meet some of the major miners that are securing the Bitcoin blockchain and verifying all the transactions. Pop across to Japan, which is where kind of the alternative side of the Bitcoin scaling debate was formed by Roger Ver, one of your guests that's in previous shows has gone through his opinions. And I went across to Mexico, where many of the core developers congregated at the last Satoshi Roundtable to try and speak to them. And at the end of the day, it's a different opinions from different people. We all share a common vision that we want Bitcoin to succeed. But success is defined quite differently by different people. So in Roger's terms, success means that everybody uses Bitcoin as a currency. We buy our bread with it, but we buy our ice cream with it, and we do everything with that. To the core developers, success, it means don't break it. It means we've created this store of value. We need to be ultra conservative, and we don't want to implement radical changes that haven't been tested and not go too fast. To the miners, success means a different thing. It means that they need to maximize their transaction fees, which they're being paid for securing the network. But also they don't want to break the Bitcoin network. So we've got this interesting scenario where, imagine if this was a company, these different people would be debating in a boardroom, but there is no company called Bitcoin. It's open source technology. Twitter has become your medium for communication and debate. And so unfortunately, we've got this bad side effect right now where people are seeing, a side of Bitcoin which I don't believe newbies need to see, which is us all debating about how to move forward. The interesting thing is that we've reached a point in Bitcoin's history now where no matter how much crap we seem to be throwing at it, the community's giving Bitcoin, it just keeps trooping along, and it continues going, and we're still at these record highs because despite all of these scaling issues, Bitcoin still is an incredible store of value. And my opinion on scaling is that we can figure out these scaling issues slowly. It might mean that transactions get a bit more expensive, but to me, they're still extremely cheap compared to different mediums. And I'm happy to pay that for some of the additional benefits that Bitcoin gives me to own my money, spend my money, and based upon sound monetary policy.
Yeah, I wrote recently in the Dollar Vigilante about how it's so interesting to see how Bitcoin develops, because essentially it's a completely anarchic market. As you pointed out, there's no boardroom, there's no CEO. Even despite what one commenter on YouTube, the Dollar Vigilante said, just wait till the Federal Reserve shuts down the Bitcoin website. It's like, there is no website, there is no CEO, there is no company. Bitcoin doesn't even really exist. Like, where is it? So it's so amazing as an anarchist, an anarcho-capitalist, to see how this develops, because this is true democracy in the marketplace, and how it develops. As you pointed out, like, it's a Twitter war. It's a drama. Like, people could write entire books about the drama and the fighting and all that kind of stuff. But at the end of the day, it's the market working itself out, which is exactly what, as anarcho-capitalists, we want to see. And to see it happening live is really phenomenal. And as you pointed out, it's still working. This is something that no one controls completely. The market basically decides what's going to happen with it, and it's gone through, I think every year I've seen a fairly major issue pop up, and of course the mainstream media has said that Bitcoin's dead over 80 times now because of it, but every time Bitcoin keeps going. So it's really quite amazing and beautiful to see how the market works itself out. And one of the things that you mentioned about the core, the tech developers, the people who are really developing Bitcoin. I used to have an internet company in the 90s, and I dealt with a lot of hardcore techies, and they're a different type of person for sure. They're obviously got certain sort of personality traits in general. They like to, they're very computer oriented and all that kind of stuff. But what I found when I had an internet company was, man, like, if you didn't really keep an eye on what they were doing, they'd get out of control with some stuff on technical stuff, but they don't really understand, like, user interface or what the customer really wants or anything like that. They're just so into the tech. They want to make the tech so perfect, but they don't really understand all the other important stuff. And the other stuff is important as well. The tech stuff's obviously very important, but also important is things like usability, user interface, how, as you pointed out, Bitcoin newbies, just coming into this, Bitcoin still isn't that super easy to use, whereas something like Dash, which has a bit more of an incentive for people to develop things for it because of the way that it's set up, has been progressing more in those terms. I'm just curious what your take is on that, with Bitcoin being controlled more by the developers, and how that's going to play out with things like usability and things like that.
Well, I mean, what you've got to remember is that the issue we're at today is a good issue to have, which is that transaction volume is higher than it's ever been. More people have heard about Bitcoin, more people are using Bitcoin, more people are investing in Bitcoin. And I think the developers are playing the role that they should do, which is that they're making sure conservatively that we don't break this as a store of value. And then entrepreneurs all around the world are free and welcome to build on top of this. This is innovation without permission. This is build whatever you want on top of that. This is a bank in a box. But let's not break the box. And I think the core developers are doing a good job of that. Saying that, the other sides of the argument do make sense, and it's a challenging thing for us to figure out. But I verge more on the side of conservatism. And the last thing I ever want to happen is that there's a split in the community, and my talks go from explaining how great, this is a great thing, you can own your money, you can spend your money, and there's sound monetary policy behind this, to you can own two versions of this, and you can spend one here and another version here, and this one's got this monetary policy and this one's slightly different. I think that's one layer too far to be able to explain to a newbie. So I want to avoid this split at all costs. That's the important part of what I think we can get out of this, really.
Yeah, that's a really good point. I don't really want to explain two different Bitcoins either, so hopefully they keep it together. It's looking pretty good right now. There's been a number of developments, even just recently, something about this ant thing. It's like a total war going on, but it's quite amazing and to see. One of the interesting things that happened in the last few months was Bitcoin went up quite a bit because there was a lot of speculation that there might be a new Bitcoin ETF, and then it went down quite a bit afterwards because there was a lot of speculation. That was, I think, in February or March, and March. And I'm just curious your thoughts on a Bitcoin ETF. I know a lot of people who are true Bitcoin sort of believers who are, their whole life's about Bitcoin. They actually were quite happy that the ETF wasn't approved. Was that the case with you as well?
Yes, it's important to, the ETF will happen. It's a question of when, because traditional finance has to, in order for institutions to play in this market, they have to do really stupid things in order to satisfy regulators. And one of those stupid things is to take a zero counterparty risk currency or asset class like Bitcoin and wrap it up in a load of counterparty risk in order to satisfy regulators, so that you can then, institutional money can then invest in this asset class. And that was exactly what the ETF was. So in the short term, there was a lot of speculation on whether that would happen, and that drove a lot of kind of a race for the cheap Bitcoins before the institutions started putting vast sums of this through via an ETF. Now, the ETF would have done a few things. It would have extinguished a lot of Bitcoins from the market, as it were. As people invest through this ETF, they'd have to back it by Bitcoins, and then those Bitcoins would sit in some kind of counterparty financial institution that could be the next Mt. Gox and could have got hacked and created a lot of problems. But I think we dodged a bullet, because right now the entire crypto market is worth about 33 billion, and Bitcoin is about 22 billion of that right now. Now, relative to traditional asset classes, that's still very small. And I don't think, with our scaling issues that we're having right now as we decide how we're going to scale to the next stage, I think that there would have been some unscrupulous hedge fund managers that would have taken advantage of this opportunity to really push the uncertainty of Bitcoin and the scaling debate that we're experiencing right now. And if there was ETFs, they could have, shorted the market and created havoc around it with, several billion that would allow them to actually do that. So I think Bitcoin needs to be, we're, going from 20 billion to about 200 billion, which I think we will certainly get there, until we're ready for some of the shenanigans that I know we used to do as market makers in traditional markets, and what hedge funds can throw at us.
Yeah, and that's interesting. So it's kind of funny because a lot of people thought after the Bitcoin ETF didn't get approved that a lot of the Bitcoin people kind of sad about it. It turns out most of them that I know are actually kind of happy about it, like yourself. So it's kind of interesting, all the dynamics in play. And as you pointed out, Bitcoin is still quite young. It's still quite small market cap. So it probably is best that gets delayed somewhat anyway. Let's talk about Bank to the Future, the financing platform. You've been financing been the platform for financing most most of these cryptocurrency, blockchain, Bitcoin-related companies. I know that at the Dollar Vigilante, at the newsletter that we do, we've been covering numerous cryptocurrencies. Of course, we've covered Bitcoin in 2011 at $3. We covered Ethereum last year around $2. It's now $70. We covered Dash a few months ago around 17. It's around 80 right now. And so if you're interested in that, definitely sign up to our newsletter. Just go to dollarvigilante.com/subscribe. And we've also brought a number of potential investments that we thought were pretty good to investors, and they turned out to be financed through your platform. One of them, I believe, was eCoin, now called WireX. That they look like they're doing very well. For people who don't know it, that's a Bitcoin ATM card. If you don't have a Bitcoin ATM card, just go to dollarvigilante.com/ecoin. But they don't accept Americans, of course. So for that, you have to go through Coinbase probably because of all the U.S. government rules and regulations. But let's talk about Back to the Future. I think you financed somewhere in the range of $170 million through your platform. So talk about when you started it and how it's been going.
Yeah, so after the book Bank to the Future, I actually kind of pitched myself and got really excited about the concept of what fintech companies could do and the bottom-up changes that could happen rather than waiting for the top-down changes. And I wanted to invest in the sector pretty aggressively. You know, my investment portfolio is really skewed towards, my belief that the future of finance looks very different from the past. And so I wanted to invest in lots of different companies, and I had people that wanted to invest with me. And so in order to be very diversified, we built the Bank to the Future platform. And the Bank to the Future platform is private equity, where people can invest in many different fintech deals. And it's designed for high net worth investors that are able to take high risks with their capital, that share this vision that the future of finance looks very different from the past and want to build a wide diversified portfolio in fintech companies. And the goal really was to chip away at traditional finance one step at a time. Originally, we wanted to create a bank and a full reserve bank, but then Bitcoin came along and created sound money. And then we had this, sort of like, I hate the word revolution, but we kind of did have this new ability for people to build companies on top of these blockchains and Bitcoin and many other areas of fintechs that have nothing to do with blockchains. But we launched in about 2 years ago, and since then we've had $170 million invested in the funding rounds listed on our platform. And that includes many of the biggest companies in Bitcoin, whether it be a Bitfinex, where we help them recover from the victims of hack and raised approximately 55 million across the different for their funding round, or whether it be another exchange like Bitstamp or Wirex or Shapeshift, and we've kind of created one place for investors that are able to invest that take such risks. It's really exciting times, and we've fulfilled that goal of making sure that there is an independent place. So, companies that are doing disruptive stuff in finance, they can come to a platform like Bank to the Future and not necessarily need to take on funding from a bank or anything like that, or a VC that may not necessarily have their best interest in mind. But we've created this place where they can raise funding from. We've got about 38,000 accredited investors that are all looking at building wide portfolios and changing the future of finance. Disrupting it one step at a time, one company at a time, one investment at a time.
Yeah, that's great. Having that platform, you must see a number of deals come through. What's sort of exciting to you right now?
So I think, there's so much interesting stuff. I think one of the important points is, we really support Bitcoin over a lot of these things that banks are calling blockchains. So we see a lot of things that banks are calling blockchains and large corporates are calling blockchains, which are actually just databases that take this zero counterparty risk blockchain, and they're trying to shoehorn it into a company take out all the things that make it a blockchain and call it a blockchain. So we're really interested in the things that kind of disrupt banking, and all the deals that are listed on our platform do one step at disrupting one part of the traditional finance, and that really excites me compared to a lot of the blockchain stuff that people are investing in right now, that actually has really supported the Bitcoin sector, because the interesting story is where this whole blockchain word came to be is when the venture capitalists invested about $1 billion in Bitcoin companies. And they weren't really happy with the growth of the sector, because they were trying to invest in it as a currency, and they wanted it to be a currency very quickly. So they started pitching their investments to some of the banks and seeing if these companies could integrate with the banks and traditional finance. Now, when the banks started looking at it, they took the word blockchain and stripped out the word Bitcoin, and then started looking at how they could patent it, own it, and use it to help with their processes. The funny thing is that blockchains are actually pretty clunky technology, which have very hard usability and cost an awful lot of money. In Bitcoin, we're burning a tremendous amount of electricity in order to pay and secure this value transfer without having to rely on any counterparty or any central bank or anything. But when you try and put that within an institution, it doesn't really do much, and it doesn't really help them in many ways, and it creates very clunky technology. But they told the whole world that it's going to change everything. And they wanted to be the bank that owns the blockchain, that patents the blockchain, and everybody has to go, plug into them. And in that, they haven't necessarily succeeded yet, but they started pitching a lot of the fund managers and the buy side of the city. When the buy side started looking at this blockchain stuff, they were like, well, what can I invest in? There's no public companies here. There's no asset like Bitcoin. And so what I did earlier this year is I had the privilege of actually getting to sit down one-to-one with many of the fund managers that are managing most of the money in the world, whether that be in Tokyo, in Hong Kong, in London, in New York, in Boston, in Singapore. And sit with them and explain exactly what a blockchain is compared to what they've been told by the banks. And almost all of those fund managers, they said, well, okay, there's no products that I can invest in our fund yet. We'll wait for the ETF that didn't actually happen yet. But they all went home and bought Bitcoin. And so I believe that the reason we reached record levels of transaction volume is because people are investing in Bitcoin as a store of value, and there's a real race for the cheap Bitcoins, as a lot of these institutions have been waiting for the ETF, and now they're actually realizing, well, I could actually just own Bitcoin anyway. And it's kind of detracting a lot of these institutional layers and counterparties on top. But Bitcoin was the only asset class that works, and when you start to generate wealth in Bitcoin because of the sound money principles behind it, people actually then want to spend it as a currency, and they realize actually it's a lot easier to send sums of money across the Bitcoin network than it is, converting that into fiat and then explaining to your bank what you're doing with your money, and then taking counterparty risk where they own that money, they spend that money, and the value of it goes, your purchasing power decreases over time. So I believe that the banks were actually the reason that Bitcoin has reached this record level of traction. And I believe that has put us in a place right now where we've reached this $22 billion market cap, and that can take us through to the $200 billion market cap. The regulators will take a while to allow them to build products that put counterparty risk around a zero counterparty risk token. And therefore, we've actually achieved the goal, and that would never have been achieved without the banks. And now we've got a system that works without the banks.
Yeah, it's pretty funny that the banks have been a big part of why Bitcoin's been doing so well, and Bitcoin could destroy the banks very easily. That is pretty much the next step. And talking about the ETF, that's why if the ETF was approved, what you just said, in my opinion, I said earlier that easily $5,000 per Bitcoin this year if the ETF was approved, because there's so much institutional money on the sidelines, but they're just not allowed under all the rules and regulations, SEC and all the government bureaucracy to buy Bitcoin at this point, but it's waiting and sitting there to do so, and that's massive amounts of money. So if ETF ever is approved, we will see Bitcoin absolutely skyrocket, in my opinion. But let's talk about the banks. We're talking about the war on cash as well. In India recently, they just sort of outlawed cash. There's been a war on cash. I've been covering at the Dollar Vigilante for years now. They're trying to get rid of fiat currency. They want everyone to get into the banking system and everything to be all digital. But we just pointed out Bitcoin could actually destroy the banks. How do you see this all playing out, especially with the central banks as well?
Yeah, so one of the reasons why today is such an exciting time to be alive and involved in this is it's probably the only time in history where we're seeing something, just significant shifts in the way that, finance is happening very quickly. So, you can take an economy like Japan, and the regulators have decided, well, let's stimulate the regulated side of Bitcoin. So they're regulating the exchanges that want to exchange Japanese yen to Bitcoins. And that's led to a lot of merchant adoption in Japan. And then you've got other approaches, like in India, where they don't realize they're subsidizing the growth of Bitcoin, but they're inadvertently subsidizing the growth of Bitcoin by actually making certain denominated bills in cash illegal. So Bitcoin is really subsidized by bad policies within banking, whether it one of the companies we invested in was Bitso, and they literally, the volume on their exchange in Mexico between Mexican pesos and Bitcoin doubled, almost tripled when Donald Trump was elected, because people start to actually realize that that's bad for the Mexican peso, maybe the market said, and they started putting money in Bitcoin. But the other companies that we're investing in are some of the largest exchanges in India, and Uno Coin, which is a Bitcoin to Indian rupee exchange, they had almost a quadrupling of volume while the government waged war on cash. And so, this was an extremely unethical, bad policy whereby they tried to take an economy that has a massive distrust of banking, that hold most of their savings in gold and cash, and they tried to wash all that money through the banking system so that they could actually, build the same kind of scheme and system that we have in the West, and build, the growth path that the West went through. But the way that it was actually implemented is you could only exchange about 4,500 rupees per day, and you had 60 days to do that. So if your savings in cash was more than 60 times 4,500 rupees, then this was a ginormous confiscation on your wealth. And guess what? As soon as they started, there was queues and queues of people with all their cash, putting them in extreme danger. And then they would queue up at the ATM, and then the cash would, the bank would close for a couple of days. Lo and behold, all the rich people that were paying, corrupt officials, were able to exchange their money, wash it through the system, and those without, that weren't able to, that didn't have the contacts, were ended up with a pile of cash that became illegal to use. So it was an extreme confiscation of wealth. And something that every government is actually following right now. So all around the world, they're waging war on cash. The reason is because it's even more anonymous and it's not traceable. Whereas Bitcoin, there's kind of an element of traceability because there's the blockchain with these transparent transactions, but there's anonymity involved in that too. With cash, there's no traceability and there's no traceability and full anonymity. That's what I'm trying to say. So they're all raging war on that. They want that to wash it through the banking system. They want to automate tax collection. So in the case of countries like the UK, what they're doing is, I believe that they're preparing for their war on cash. Well, they'll take out, say, the £50 note. But prior to doing that, they've implemented lots of legal changes. So one of the changes that they've implemented is they've made it, new rules that allow bail-ins to happen more easy. So the government doesn't want to be liable if the banks take too much risk. They don't want to bail out again. The taxpayers have no appetite to repeat that exercise, and I don't think it will get past voters again. So they're implementing bail-ins, which is adding additional layers of risk to your deposits. But also they're making it so that if the tax collector believes that you owe them tax, they can actually take that directly from your bank account without permission and without due process. So they've reversed it whereby you need to prove that you don't own the money in courts rather than the government needing to prove that you do owe the money in courts. And so all of this is making, making people realize those things that they just didn't realize or care about before, that they don't own their money, the banks spend their money, and that their purchasing power is going down over time. So where is this whole war on cash going? Well, the interesting thing that came next is that the central banks started to use the blockchain as an excuse and a reason to actually introduce a new tool to raise war on cash. And the interesting thing is that they're using the word blockchain, but what they actually mean is a central bank created digital currency. And a central bank created digital currency has no transparency. They don't want to give away their seigniorage income because they make money from printing money when they sell it to a bank and put it in an ATM, and it's high margin. In a country like India, seigniorage is important for them because they find it hard to collect as much tax as other countries because everyone's holding their cash. So the way that you actually get around that is that in order to eliminate cash and slowly get rid of it from an economy, is you can create a digital currency where people can change their cash, or they can change their money at a bank and exchange it on a one-to-one basis for a digital currency that was created by a central bank. What becomes really interesting in this is actually so in Canada they've created a digital wallet where you enter your social security number, and it was created by the central bank, and you can purchase CAD coins. CAD coins cost you $1 and you can purchase those by making a bank wire or a card payment. But what you're actually doing when you're purchasing those CAD coins is the central bank is actually issuing currency, digital currency. If you purchase that currency with your card or a bank wire, you're taking money that was created by a bank and backed by debt, exchanging it for debt-free money that was created by a central bank. And essentially the central bank is waging war on the commercial and retail banks. Is that a good thing?
You have a reminder to go to the AirTM at 11 o'clock today.
Okay, I'll
Don't
take
worry
that
about
back again. Is that a good thing? Is that a bad thing? Well, you just got to ask, where would you like to have your money right now? So you've got a few options. You have it in cash, but that introduces the ability for it to be stolen, and you've got to take these large cash. It's very inconvenient. Or you can have it at a bank, and with a bank you've got the counterparty risk in that they own your money, spend your money, and it's based upon bad principles of money. But with this, you can hold it at a central bank. Now, I think I prefer having it at a bank than a central bank, because at least it's one step removed from the government. But once you've got it with a central bank, they can actually, with these new laws, they can decide, well, you owe some tax, so they can just take it straight from your digital wallet. Then you have to go through due process to prove that you didn't owe that tax. They can shut your passport off. They can do whatever they want based upon them tracking how you're spending that money. The end result is that I believe, people are going to hold the minimum amount of money in such a system as they need to make their daily purchases. So I don't believe that Bitcoin will ever be a good currency in the sense that you will, I don't think a good currency requires a stable price, because you don't want your bread to cost you twice or half of much in a couple of weeks. While many currencies fluctuate just as much as Bitcoin, the pound has lost about 25% of its value. Look at many other currencies, many other examples of this, the Mexican peso as well. The reason Bitcoin is a bad currency is because it's a foreign currency to everyone. No one's going to ever price their goods at 0.001325 Bitcoins. We're always going to think in terms of a traditional fiat currency. And so your daily expenditure will always be done with your traditional fiat currency, I believe, whether that's held with a central bank or a retail bank. But where you store your wealth is going to be a decision that people can make in the future. At the moment in India, they're choosing gold and cash. When they introduce a war on cash, you get a tripling or quadrupling of volume at Bitcoin exchanges because people are choosing Bitcoin for some of their wealth. in the future, there's other digital currencies that compete with Bitcoin. For example, the IMF has their digital currency called special drawing rights, which is backed by a basket of currencies. But I believe that people are going to choose to put their money in store their wealth in something where they own their own money, they can spend their own money how they wish, and it's based upon some kind of sound principles. At the moment, the IMF special drawing rights doesn't have that. Traditional money doesn't have that, but Bitcoin does, and you could argue that gold does, and other asset classes that are kind of put in the same category. So the end result really is that, again, central banks are now waging war on traditional banks by introducing their own currencies, whereby people can exchange their money at a bank backed by debt for debt-free money created by a central bank. But because this money has bad properties to it, people are going to, more and more are going to start to realize, well, actually, I could put a portion of my wealth in an asset class like Bitcoin or gold, and it's subsidizing those markets. So again, all of this is bad for banking, good for Bitcoin, and my original investment theses, which is short different types of anything that relies upon traditional finance, and long anything in the fintech sector and the cryptocurrency sector, and a large diversified pool across there. And that's kind of my investment thesis for now. How long that will take to play out, that's anyone's guess. But in the meantime, Bitcoin has turned out to be an incredible store of value, and it's actually becoming what back in 2011 I never imagined that it actually would become, but it's there now, and it's thanks to banks, it's thanks to central banks, and it's thanks to bad government policies, which is subsidizing the growth of Bitcoin.
Yeah, it's great that banks, central banks, and governments have helped out Bitcoin so much. It's beautiful, actually. And it's interesting to hear your theory on what is happening and what could happen. The banks seriously could disappear in all this, and we could just end up with cryptocurrencies and central bank fiat currencies, which would be digital currencies, which, as you pointed out, a lot of people will be quite scared to hold because they'll have access to just take it whenever they want, tax it whenever they want. So this is getting really interesting. It's a fantastic time to be alive, especially for someone interested in finance as yourself. This is an app. You say you don't like the word revolution, neither do I, because that just means going back to where you were before. I like the word evolution. This is a true evolution in money and banking, and it's happening right now. So it's exciting times. People definitely, if you don't know about Bank to the Future, check it out. Definitely check out the Dollar Vigilante. That's where we feature a lot of these sort of investments. Just check out dollarvigilante.com/subscribe. We'll put that in the links down below. We've been covering this since 2011, and as Simon said, this is very incredibly interesting times, fascinating times, also very profitable times for a lot of people, as we've seen with Bitcoin and many of these investments as well. So Simon, anything you want to wrap up with? Why don't you let people know where your book, your website, and anything else you just want to mention?
So I mean, the book's available wherever you want to get it. It's interesting because the second draft was written in 2012. But I think it's interesting to see a lot of the things we were forecasting and how that actually turned out. And I'm desperately trying to find the time to actually write the next version, because in crypto world, even if I write a book, the next week is probably completely changed. That's how fast this is all moving. But yeah, if you're involved in the fintech sector and you're creating something disruptive, we'd love to see if we can raise some funding. You can grab me on Twitter, Google my name, and I'm very easy to find. It's as you said, it's one of the most interesting times in history, one of the greatest times to be alive. I don't actually want the banking sector to collapse, because that would hurt a lot of people, and that would be a very painful thing. While our investments would perform incredibly well, I wouldn't want to do it at the expense of everyone. But that is actually a reality that could happen, but now there is an exit, there is an alternative. And unfortunately, a lot of people are going to get hurt in these financial markets. And so I encourage, while this is a very high risk sector, I think, people should experience getting their first, even if it's a tiny fraction of Bitcoin, get your first beep. Realize that you own your money, you can spend your money, and it's a store of value that's based upon sound principles. and go out there and send it to other people, see what it's like to transact on this peer-to-peer network. You may be skeptical, but once you actually try it, you never really go back. I've never met someone that's tried this, experienced that liberating feeling, and said, God, I wish I didn't do that. I've met people that have actually accidentally had their Bitcoin stolen. So, play small initially, learn how to secure your coins. There's basic rules that you can implement. It is different to normal money. It requires learning a few new things. But I believe that it's actually going to become a life or death thing for many people in the future. And so the time to start, I believe, is now, when you may not necessarily, when the stock markets are at all times high, everything looks rosy. That's the time to actually be looking at the alternatives, not when you have to or need to.
Yeah, absolutely. We've been covering Bitcoin here at Anarchast since 2011 and at Dollar Vigilante. So hopefully most of the people following this have at least tried to get some Bitcoin and tried to use it at this point. If you haven't, as Simon said, once you get your first beep, it just changes everything. I remember when Trace Mayer sent me my first Bitcoin. It's about... well, I guess it was $10 worth at the time, but it was $3. So I guess that's like a few $1,000s he sent me back in 2011. And as soon as it went beep, my eyes just opened. I went, this changes everything. and you'll find the same thing. It's one of those things you kind of have to try to see how it is, and just send some to your friend, and wherever they are. They could be in Hong Kong like Simon, and beep, and it's like, whoa, no one can stop this. No one, I don't have to call someone at the bank. They don't have to ask me what I'm doing. It doesn't really cost anything, or it's very, very cheap. And so definitely check it out. And Simon, you brought up a really important point about what's going to be happening over the next few years is going to hurt a lot of people, and that's what I cover at the Dollar Vigilante a lot. The whole tagline of Dollar Vigilante is surviving and prospering during and after the dollar collapse. And I not only think that all the banking system could collapse. It almost collapsed in 2008. The next crisis is probably going to come close to collapse or collapse again. But not only that, but even you brought up central banks and fiat currencies. All these governments are so bankrupt now that we're going to see the fiat currencies all collapse as well. And then there's going to be new fiat currencies, going to be new fiat digital currencies and stuff like that. But a lot of people are going to get hurt. So I know this goes above the head of a lot of people out there. A lot of them, unfortunately, went to government indoctrination camps for 12 years and drank fluoride that's put in the poison in the water in the U.S. For most of their lives. So they can't understand a lot of this stuff. But for people who can understand that, please like, subscribe, share this video. This is actually really important stuff. As Simon pointed out, unfortunately, we don't want this. I don't want this either. I don't want to see millions or billions of people get hurt in this collapse while we're making fortunes. I'd rather make less money and less people get hurt because they all figured it out and all got onto the Bitcoin and cryptocurrencies before the collapse happened. So that's why please share this video with as many people as possible, and also share our Dollar Vigilante videos where we talk a lot about this stuff. It's really important. And you imagine people in Greece or Cyprus, Simon, a few years ago, if you have family there, if you told them about Bitcoin in 2012 and they got some of their money out of the bank and put it into Bitcoin, how much better their lives would have been, especially with Greece with the banks closed for months or years. Cyprus, they took half of the people's money straight out of the bank. So yeah, these are really, we talk about, these things lightly sometimes, but it actually can really help some people and really change the world.
My mom did just that. She lives in Cyprus, and she's not tech savvy, but she saw this Bitcoin thing that I was interested in, and she decided to put some of her, a small portion of her pension in Bitcoin, and that's turned out to be her greatest investment out of everything her pension's invested in.
Oh, that's great to hear. So hopefully more people do stuff like that. Not put your whole pension into Bitcoin right now. It's at all-time highs. As Simon pointed out, it's a small market, it's risky, it's a new asset. But start learning about it. Definitely get into it. And once you start to learn about it, you'll start to understand more. And then maybe you might want to invest some into it. But of course, be careful like anything. But Simon, I see it's late there in Hong Kong, and I see at 11 o'clock you have to BTTF at AirTM, whatever that means. So I'll let you go. Anything else you just want to finish off with? Any URLs or websites or anything?
No, you just Google my name if you want to check me out. I blog. I'm on all the social networks. Look me up on Twitter, and if you've got any questions about this, I try and jump in when I can and answer those questions. If you're looking to invest in the fintech side, then you do have to be, for regulatory reasons, you do have to be a high net worth accredited investor that can afford to take the losses of investing in such a risky asset class, but we'd love to help you build a portfolio there if that's you.
That's great. And we've talked about you possibly coming to Anarchapulco next year. We haven't decided the dates yet. It's going to be sometime in February 2018. We have one full day on Fintech called Cryptopulco. And so we're hoping to see Simon Dixon there. We'll work out those details over the coming months as we work out the dates. But I hope to see you over here. We have so many, all the best people in Fintech and cryptocurrency and Bitcoin are here every year in February, which is beautiful on the beach in Acapulco. So stay tuned for that. I'll, of course, be talking about that here on this podcast. And that's it. I'll let you go, Simon. And that's it for Anarchast, your home for anarchy on the internet. Peace, love, and anarchy.
From Acapulco, Mexico, this is Anarchast.